Oh, that's Vernon. That's quite an introduction. I appreciate it. Vernon did call me up. He did say I would like you to come down to the Economic Club of Washington. And if you don't, everyone I know is going to remove their accounts from J.P. Morgan. But Vernon, when he talked about the medicine of life, what he forgot was a part of the story that I always remembered. I had just gone to Bank One. I had started the job. I knew no one in Chicago. I had never met the management team. I was sitting in my office myself the first Wednesday or Thursday. Vernon calls up and says, I'm coming to town. I know no one there's talking to you. I'm taking you to dinner. And we had dinner literally that first week, and which I always appreciated. And Ann and the whole family, and also they always skip this part of my career where the guy I worked for 17 years fired me. Like there's that little gap. And but during that little gap, both Ann and Vernon were extremely helpful to me and my wife. I remember him explaining to my wife, or Ann, I forgot which one, at one point, revenge, don't ever get mad. Just do the best you can and move on, because otherwise your life will be controlled by something you can do nothing about. So I do really appreciate that introduction. It's I'm going to cover a lot of things today. I'm going to answer any questions when we're done. And someone said, anything. I said, absolutely. I just got my last of 3 teenage daughters into college. So if you have how many of you have teenage daughters? I'd be happy to answer questions. We think we've done it successfully so far. And it's also a little hard here because in this room, I have a board of directors, but I also have things called regulators. It's kind of like, think of them as the super senior board of directors or something like that. And there are a lot of them are here, from a former one, Jerry Hawk, to Undersecretary of Treasury Bob Steele, to Sheila Bair. So I have to be a little careful in some of I'm not going to complain about regulation, put it that way. The other thing is I have Sharon Rockefeller's here. And when you talk about David Rockefeller and J. Pierpont Morgan, if I had one wish when I got this job, is that my grandfather and all my grandparents, immigrants to this country, could have seen this. And unfortunately, he died. But it is an unbelievable thing what this country still represents. But also we have Mr. West, who sold his company to Bank One Weaver Brothers, a bank many years ago. So I'm going to talk about 5 subjects that I'm just going to cover real quickly. J.P. Morgan. The reason, unbelievable proud heritage, 1,000 companies. So from the Weaver Brothers to Bank One to First Chicago to Chase Chemical, Manny Handy. You can go to Dayton, Ohio, Marine Bank, Indiana Fletcher. And I'm kind of the steward of this company while I'm here. But it's got this unbelievably proud heritage. And it exists for customers. Okay? And I always remind people that's why a business is there, and to do the best you can. So I really do consider myself customer service rep number 1. If any of you ever have a problem, you can feel free to call, email. You will get a response from me in my office, because we will make sure we're trying to do the right job for you all the time. And by the way, if you're a shareholder, I'm doing the best I can. I'm going to talk a little about the future. But I remind people businesses make mistakes, including, we've made a few, not as bad as some of the others, but I said we should never feel great. We should never feel great because the slide says we suck less. We want to do a great job every day. And so the 5 subjects, I'm going to cover them quickly to leave plenty of time, is the financial crisis. I'm going to cover kind of very briefly all these things. The housing in particular, some major lessons out of it, a little bit about American competitiveness, and one last statement, which is a semi-political statement about corporations. My daughter called me up a while back. She's at college, and she said, "Dad, what's a financial crisis?" And I was really happy because I thought she was reading the paper. And I know the chairman of Gannett is here. And I always got USA Today because I thought I could get my kids to read if there were pictures. It didn't work. So if you have teenage kids, and without trying to be funny, I said, well, it's a thing that happens every 5 or 6 years. And the fact is it does. Okay, we had the '01 internet bubble, and put in the back of your mind when that bubble burst, $4 trillion of market cap was lost. We had the '97 LTCM Asia. We had the '90 kind of real estate savings and loan. '87 market crash, 25% in one day, and the last real recession in this country, 1982. And you're talking about unemployment, hitting 10% prime, 21.5, and those were tough days. 74 was even worse. And when you look at these crises, by the way, they do happen periodically. There's always something different. There's always some things which are very common. And I should also point out that several of them were financial crises, did not cause a recession. So put that in the back of your mind for a second, too. And when we're going through this, when someone looked at investment banking results and they say, God, these investment banks have volatile earnings, I said to them, you mean to tell me you thought they were steady? I mean, some of these are large, risky global businesses, and businesses take risk. You want business to take risk. You want some business to fail sometimes. That is what a healthy system. So I always say, look at all these things and measure them relative to cycles and relative performance. So the differences here was housing. We had a housing bubble, prices from 50 to 100% over a 5 to 7 year period. And then, Warren Buffett says when the tide goes out, you see who's swimming naked. The bubble burst, with subprime, CDOs, monolines, SIVs, and it's still going out. But a lot of that's around housing. By the way, total expected losses higher than were initially estimated, maybe $300 billion. Nothing compared to the $4 trillion I mentioned, and nothing compared to some of these other years. So I'm not going to go through that in a lot of detail, but put that back in your mind. What's the same? A lot of volatility, all risky assets repriced, like bond spreads, stuff like that. Short-term funding can become very difficult. That TED spread changes dramatically. There's a lot of fear, and the worst one is that we have the specter of recession. And I want you to separate in your mind a little bit, the financial conditions. So when banks lose money or financial institutions lose money, you shouldn't feel bad for them. Hedge funds, wealthy people, it's not a big deal. What does happen, though, is when they start to create an environment where financial conditions are hard for borrowers. So if you used to be able to get a subprime mortgage, you can't get one now. Actually, J.P. Morgan is still making them, and jumbos. If you used to get a jumbo, it's going to cost you 100 more basis points. And every business in here is paying more for their money. And those financial conditions kind of weigh on, create this higher chance of recession. Don't cause it. Think of them as one factor in there, in addition to oil, sentiment, global trade, company balance sheets. And then you have the specter of recession, which is also now seen in the markets. So you have a kind of a frozen markets. And but if you ask me, are we going to be in a recession? I kind of think we're in one. But I'm more of the Yogi Berra school of management, because Yogi Berra said it's really hard to make predictions, especially about the future. I have never, ever seen people really predict the course of the economy. It is really complex. And there are so many positives, negatives, and you can read all the same things I read. But the financial conditions are kind of getting more extreme. And I don't know if they're going to get more extreme. I'll give you a point of view at the end. I will point out for J.P. Morgan, we've always believed in the fortress balance sheet, and I think I've always told people it's not a philosophical bent to be conservative. I always thought you should have a fortress balance sheet in this business, and maybe some of yours, because bad things happen. And a fortress balance sheet is plenty of capital, but it also includes conservative loan loss reserving. I would tell you, I was probably one of the few people trying to add loan loss reserves. The regulators like loan loss reserves. The SEC hates them. Trying to make sure we have real controls on off-balance sheet assets to make sure that your accounting across the board is as conservative as it can be. So at least at this company, we try to be almost as conservative as it can be to protect the company and for environments like this. And I think that's one of the best things you do to be prepared for this kind of environment. The housing crisis, I'm not going to go into detail. Housing prices are down 10 or 12 or 15%, depending where you go. California, Florida, Nevada, much worse. In those states, unemployment has only gone from 4.5% to 6%, kind of surprisingly low to me. But you have predictions by some very smart people that's going to get a lot worse in housing. Housing down another 10% is kind of the market, but some would say another 25, a total of 35%. That would be so unprecedented, other than the Great Depression. It's really hard to estimate the impact. And I think you do see a lot of things taking place that are trying to fix that, but you do have fairly frozen markets. And the secondary markets are crippled. There's real uncertainty. One of the reasons people aren't buying any mortgages is because you sit to buy a mortgage saying, what's going to happen to housing? What's going to happen to the recession? And the uncertainty is so wide, why take the risk? And so until we sort some of this out, it may be hard to figure out what you should own or what you shouldn't own. Banks, believe it or not, we want to keep people in their homes. I mean, this stuff when I read the paper, somehow we want them out. When you foreclose on a home, you lose a lot of value. And besides that, we have to mow the lawns. So a lot of the good banks, I think, are trying very hard to do everything they can to keep people in their homes. And I think that's a critical aspect. I also think a lot of people are handing their keys back. They don't want the house anymore. And I'm going to tell you some of the mistakes we made about how we got to that position. So if I was a regulator, government official, any one of them, I'd be planning right now for a really bad scenario. We don't have the luxury to get around to it, to politicize it if, in fact, it gets much worse. And I'm not going to go through what those are, but I do think there are some things that can help the markets a little bit more, and I'm not asking for a bailout for J.P. Morgan or any other major bank. Some major lessons: mortgages used to have 20% down. So over this whole period of time, this bull market in homes, okay, we should have been tougher on brokers. Their loss was always worse. We went from 80 to 85 to 90 to 95% LTV to less documentation, and it was kind of a creeping incrementalism called bad underwriting, totally to blame. But we didn't see the results because the housing market was so good, there were no losses. So people just did more and more. And when they had no equity in the house, people just leave. In other words, it was no longer a mortgage. It was just, if the house goes up in value, they get the benefit. If they don't, a lot of them walk. So of all these losses, people are simply leaving. Remember, keep in mind, who's losing the money? And I'm a Democrat, and I feel I don't want to kick anyone out of the house, but it's the banks. The other people had no money in, a lot of them. So we've got to be a little careful how we treat this thing. And I'm a little surprised, by the way, that there's no morality around people having to pay back their bills. I think that's almost true for corporations now when they go bankrupt very readily. Wall Street has a lot of illiquid products. This is my own guess, and we haven't done the work, but as a regulator, bigger parts of investment banks' balance sheets were liquid assets, or they became illiquid, involuntary liquid. CMBS, warehouses, CDOs, subprime, leveraged loans, and stuff like that. And for a lot of these folks, when you go through it, they were funded short. So that is the same banking problem we've had over and over and over. Long-dated, illiquid assets funded short. BSAM did it in their hedge funds. The CIVs did it. The CDOs did it. They couldn't roll over asset-backed commercial paper. You had a little bit of a crisis. CIVs, honestly, no real business purpose for them. You know, J.P. Morgan didn't get involved in them for a lot of reasons, but I was surprised at the size of them. Most of them were really badly structured. There were some exceptions. And CDO squareds, honestly, just too complex. I mean, when you have to run a mainframe all night to do 70,000 Monte Carlo simulations to calculate the value of a security, it's too much. And I'm not going to blame the rating agencies because, honestly, I think they just made the same series of errors here that were made by lots of other people. New products often cause issues. Okay, and by this is the birthing of new products. That's true for equities, FX, Ginnies, repos, and now you have it happening kind of in the subprime securities, the CDOs, and some people think we're going to have in some other new products, more around the settlement and clearance. Valid concern. It is a valid concern. We spend a lot of time trying to make sure we do that right. Someone said to me, I think I was at, Jamie, don't you worry about SocGen? Like in the recess of your mind, don't you worry about traders and derivatives and stuff like that? And I said, hell, in the back of my mind, it's right here. I mean, if you run one of these companies, you don't worry about that stuff. You're not thinking clearly. And the only good news about SocGen is at least we don't have to listen to the French complain about us that much. A lot of the policies that regulators worry about, and I think the regulators know this, are pro-cyclical. They make it worse. Loan loss reserve at the most benign time in a credit cycle, the lowest loan loss reserves, the lowest capital, the most highest margin you have, and that's true for loan losses, ratings, capital, mark-to-market accounting, and we've got to do something about that. Because once it starts, banks have to cut back, people have to put up loan loss reserves, capital gets removed, and there's very few policy mechanisms that go the other way. I do think in the financial side, by the way, and I don't know for sure, but sometime by the end of this year, I think the financial side will have worked through a lot of this. Meaning there is no more production of leveraged loans, CIVs are being deleveraged, hedge funds are being leveraged, there's no more CMBS, there's no more CDO, supply and demand will meet. That does not mean we won't have a serious event in housing and in a recession, but some of this is working itself out. My guess is it's about 50% done, and some of it rather quickly. A lot of these problems that pop up have been resolved. American competitiveness, I'm not going to talk about the short term. The short term, people talk about IPOs and accounting and Sarbanes-Oxley and litigation, all legitimate, but I would never stand in front of an audience and say, that's why J.P. Morgan is not doing well. It may cost us a little bit more money, reduce our ROE a little bit, but that's not the reason. I do want to talk about the long term, and I think this is really serious. It's not going to affect me while I'm at J.P. Morgan. It will affect the future and health of this country. I'm going to ask you, I'm going to be an interactive question real quick. And you got to be honest. How many of you were really ticked off about the price of gas? Raise your hands. You're really ticked off. Now, be honest. Okay, you don't have the right to be. You don't, no one knows what it costs. You don't refine it. It's cheaper than that bottle of water over there. We're digging 10,000 feet into oceans to bring it up. And we don't have a policy. Or someone said to me, we have a policy. It was by default in energy. So we've known since 1974 or 19, whatever year it was, we haven't had a policy other than by default. And I put energy and environment together, okay? We don't have, if you want to have, and here France has a well thought through, well executed over a long period of time, nonpartisan policy to reduce their dependency on oil and be more environmentally friendly. Brazil has had an energy policy. The United States does not. And I would put in this category, by the way, of the major issues that can actually hurt this country dramatically: energy and environment, education, secondary education, infrastructure from power grids to railroads, medical, pension. I'm going to talk about trade in a second. And these are really serious. And sometimes I think that people think the United States has divine right to success, that we're going to be successful no matter what. This is God's country, and we're going to be successful. If we don't get these things right, it is not true. And most good policy needs to be thoughtful, based on analysis, facts, nonpartisan, done over a long period of time. So, like one day, what's the cheapest way to reduce CO2 in the air? Anyone know? It's insulation in the home. Matter of fact, it would have a positive return. It wouldn't cost any money. Okay, so one day we're going to have policies that do the right thing. And maybe if you have a tax on BTU, well, if there's a policy matter, we don't want to have people who don't make a lot of money, take it out of the payroll tax. So if you're spending $2,000 extra driving, the person who makes less money gets it back directly. But we're going to have thoughtful policies in these categories. And by our competition, so we have to keep America vibrant and healthy. We have to keep our companies vibrant and healthy. And we worry about competition from around the world today. We do a case at JP Morgan that says, what if a big successful Indian bank takes over an American bank? Can we compete? Can we compete? And we're going to have to be able to compete. We've reduced trade. So trade, most people would say, has taken $1 billion to $2 billion people out of poverty. It's brought the world closer. It's a good thing. Okay, and we've reduced it. I was listening, I'm a Democrat, I call it a weak Democrat because I think they're a little crazy sometimes. But we are starting, when I listen to them against NAFTA, against trade, against, what in God's name are they really thinking? And this is a good thing for the world. There are some people who lose, and we should have good industrial policy around that. But we can't have the Republican Party and the Democratic Party, both sides going against trade at this point, something that's been so good for the world. Because if we don't, we won't have a healthy, vibrant company. I also remind a lot of people, if you were an Indian company, a Chinese company, what do they buy from us? Aircraft engines, airplanes, pharmaceuticals, semiconductors, software, financial services. It's not a one-way street. And we benefit enormously from all of that. So, I would hope that we start to educate the public and not pander to the public about some of these issues. Deal with the legitimate issues, which I think there are some, but make sure we don't destroy the beasts that created all this. And the dollar, we're just sleeping in the bed we made. So why we should be complaining about the weakness of the dollar, it's good for some companies. When you have a trade deficit and a federal deficit like we've had, you are going to have a weak currency. I remind people in the financial business, we earn in a quarter. Do you think it has a lot to do with what we did that quarter? It's the decisions we made over the last 7 years. And that's what the dollar is. Then we give the dollar to things called to foreign countries. Some of it ends up in sovereign wealth funds. They were buying treasury bonds. And they want to buy some other things, which you and I will all want to do if you were doing that. And we say, we don't like it. We don't like it. Take our dollars, but you can only buy treasury bonds. And, and I think there's something wrong about that. This money is perfectly fine and legitimate for them to invest it the way they want. They've helped a lot of companies. Fortunately, we're not one of them, but there are legitimate issues around states controlling American corporations. They're legitimate, but they're not, let's not make a mountain out of a molehill. And so, because there's a lot of anger overseas about we should be able to invest our money the way we want. And someone reminded me the other day that CalPERS, which is a state-controlled fund, it also interferes in corporate governance. And we allow that. So I just think we've got to be a little more rational about some of these things and make sure we do what is really good to keep this country really competitive and really healthy, and then maybe you can have a debate of how you share the wealth. I do think that's a legitimate thing for democracy to talk about a little bit. Last thing, this is speaking for all the people, all the companies in this room, because I know I speak on behalf of all of you. The vilification of business is just starting to really irritate me. And it's not just business. We vilify politicians, we vilify lawyers, we vilify doctors, we vilify everybody in this country now. There was a survey that came out, there's only one profession, which is now, I think, is that more than 50% of the population respects them, and that's firemen. You know, and we used to have a lot more respect for people. And, you know, it's gotten so bad. There's a survey that was done years ago, or someone had done a quick little survey, and it's something we were at, and they said, you know, people said, how many do you trust lawyers? You know, and 80% don't. And they said, ask the question, do you trust your lawyer? And 80% do. And we're doing that almost across the board. J.P. Morgan and most of the people in here are great corporate citizens, okay? We give away $100 million a year in philanthropy. We lend $80 billion a year in CRA, which is basically lower middle income housing mortgages, business development zones, et cetera. We help welfare mothers get back to work. We give jobs to inner city school kids. We invented ATMs that speak to the blind. Okay, and we're just one company. If you were a veteran and you were called, if you're in the reserves and you're called to service, we pay your salary for the full time because we can afford it. And we think it's the right thing to do, not to add financial hardship to the great personal hardship you're going through. When the tsunami, the earthquake, and the hurricane hit, money and people as fast as we can. And again, this is what I'm really speaking for all of you. And yet we vilify these companies. We act like when they're punished, who gets punished when they're unfairly punished? The shareholders, who happen to be our parents, labor unions, states, you know, and we act like some of you punishing the CEOs or something, which is not really the case. And one of the things I do think here is that businesses need to get more involved in Washington and not run away from it. It took me a while to come to that position. I think we need to acknowledge legitimate complaints about shortcomings of policies, procedures, products, and there are many, and they should need to be reformed. We need not to embarrass ourselves, like when a lot of people argued against option expensing, like that was going to destroy technology and innovation in America because we had to expense options. And I always tell people, did Henry Ford have options? You know, we do fine without them. And so we have to be kind of nonpartisan, not completely self-serving when we come to Washington. And we should really try to participate and do what's right for the country. So I'm going to stop there and open the floor to any questions or comments, issues that are on your mind. Thank you.
Rating agencies a pass when you talked about the financial crisis. Why? Aren't they at blame for some of the rating agencies for some of our financial problems?
You know, I think that some of the problems I mentioned, they made the same mistakes that some big banks made and institutions made. And yes, you can blame them, but I think, we love to blame people. I would also say that a lot of big institutions always told me, I don't buy anything based on ratings. We do our own work. So it's always easy to blame other people. I think they have things to fix, and yes, they made mistakes. They did not cause the problem. They added to it, just like bad underwriting added to the problem by financing more houses at the end, but it didn't cause the problem.
There's Mike.
Jack Lippert, the Washingtonian. As a Democrat, what differences do you see between Senators Obama and Clinton?
As a Democrat, first of all, I think they're both, it seems to me to be very qualified individuals, hardworking. Other than that, I'm not going to answer the question. The napkin, yeah. Thank you.
Right there. Dinesh Sharma, Washington Business Group. Simple question. Are we in recession or are we not?
I already said I thought we were.
I'm sorry.
I already said I thought we were.
Okay.
But look, I'm not a seer of recessions. I don't know. But it looks to me that what we're in right now, most people would probably call that
Thanks.
recession. Yeah.
Right in the back.
Tom Frank, Chevy Chase Trust. Jamie, one of America's great exports over the last 20, 30 years has been financial sophistication. As you look around the world, how do you see that competitive landscape changing? And what parts of the world or countries do you think get that and are ramping up to be our competitors there?
Yeah. It's a very good question. I still think this country, not just in financial sophistication, even though some of the things didn't work exactly right, but in innovation, technology, use of technology is still exceptional. But I think it would be a mistake to think that the Indian companies aren't doing it, the Chinese companies aren't doing it, that European companies aren't doing it, companies in Brazil aren't doing it. They're all getting better. And that is a good thing for the world. It'll create more for the world, but it's going to create a lot of tougher competition for us. So when we make a map for our board of future competition, we always mention those as being out there.
Can we get a mic here? Right here, right here. Thank you.
You mentioned that we should not vilify businesses, but over the last few years, it seems like that we have moved away from the principles of good business and focused on the immediate and maybe the projections of what we say. Can business turn around and correct this image so that we can get back to maybe looking at a balance sheet and not focusing on what the immediate results are and get to the points where we respect our businesses?
Yeah, so I think, first of all, when you blanket the brush of businesses, I can make any blanket. I think it's unfair. I don't think any one of us who are thinking, thoughtful people should blanket corporations, people of color, women, men. We're not all the same. There are some fabulously good people that do exactly what you say. There's some who didn't who are going to change. And so I think most of the business people I deal with are exceptionally have high integrity, and no, it's not all about earnings. It's about building a company over a long period of time. And there's some great standards for all of us. There's some companies that have been doing it year in and year out for a long period of time, and we study them because we think we can learn a lot from paying attention to those companies.
It's Rob Duggar, Tudor Investment Corporation. Clients of yours and do a lot of business with you. A central aspect of this contraction that we're going through is a effective shutdown of foreign capital coming into this country. They've just basically ceased buying the securitized private assets that we used to sell. And this has cut off an enormous amount of credit. What steps do we need to take as a country to regain the confidence of these foreign investors?
Yeah, so I actually don't completely agree with that because foreign investors have put tens of billions of dollars into American banks and investment banks. They still buy, from what we can see, a lot of treasuries. They've become a lot more conservative on mortgages, but not just them. I'd say it's everybody. In fact, I sit in a room like this and people talk like the banks and the foreign investors, but people have told me I got rid of all my money funds. I sold all my commercial paper. I'm not doing any of this anymore. I'm putting my money in T-bills. So it kind of gets pulled out of the system by us. People acting completely rationally on their own. That's kind of part of this pro-cyclical thing I'm speaking about. This has happened almost every single time. In most of those crises I mentioned, it's happened. So I think they'll come back. The yield curve helps. We've got, I think, fiscal policy is going to help. Monetary policy is going to help. Getting paid a lot more to go long or take risks is going to pay. And a steep yield curve is going to help. But it may just take a while to repair. There's no magic to it, unfortunately.
Hi, my name is Bill Mutra, and I'm with Holland & Knight, a law firm. You mentioned that we have a weak dollar primarily because of our our balance of trade deficit and our deficit spending. are two of the causes. It's very complex. Assuming we don't correct these in the near term and we have a prolonged time when these two events are occurring and we have a weak dollar relative to world currencies, what effect do you see that having on our economy over a longer period of time?
Yeah, so I just reiterate, the point is the dollar, you want a strong dollar. But a strong dollar is based upon having a strong economy, which is based on good fiscal and monetary policies over an extended period of time. And that's what we're paying the price for. The weakness of the dollar, if you went company by company, some companies are doing great because the dollar's down. And you can name one after another. The agricultural business is doing great because of commodity prices. So there are people it helps repair by having a weaker dollar. But that's why you don't have the Secretary of Treasury saying they want it, because it basically means you had a weak economy. So the stronger the economy, the better the policies, the stronger the dollar, and the quicker we get there, the better. Remember, the strength of the dollar is looking forward at not just interest rates, but about when will the economy recover.
Hi, Renthia Rost from Geico. How long will the slide exist in the housing market? You say we're at 10 to 15% of value. Do you see it rebounding in the next cycle?
I honestly don't know. And, we do scenarios that if there's a very smart analysis done, I forgot who did it, that shows if you take new home construction, the fact that 1 million or 1.5 million more homes are needed, American population is growing by 3 or 4 million a year, the destructions of homes, the inventory, the purchasing, the availability to buy, that'll be sometime in the first or second quarter of next year that supply and demand will balance out. And with the big caveat that really does depend on whether or not we have a recession and how bad that recession gets. And that will obviously make it longer if the recession is worse.
Tim Coughlin, Edgemore Investment Advisors. Would you comment on the job that the Federal Reserve is doing under its new chairman and how effective you think it is?
Yeah, I think that they are very smart, thoughtful people. I think that they're trying to come up with new ways to finance and deal with these problems, like I won't go through them all, the TAF, the thing they did yesterday. They've reduced rates dramatically. They obviously can reduce them more if they think it's necessary. So I think they're doing as almost as good a job as you can think. The only complaint I've heard people is that they could have done that 2 weeks earlier. I'm just not sure the 2 weeks would have mattered that much, except maybe a little bit psychologically. But I think that they're fully engaged in trying to understand and how to help ameliorate, mitigate any real bad downside.
Right there.
Hello, my name is Jeff Neal, a real estate investor here in town. And unlike the president of our club, I'm thinking about moving my vast fortune into your bank. But the answer to the question will be a factor in that decision. You made the point, you contrast...
I'm not the best salesman in the world, so...
You made a point about contrasting the deterioration in wealth created or caused by the tech bubble burst. $4 trillion, I think was the number you said, as compared to the relatively small amount of wealth or losses that have been created because of the subprime crisis, so-called crisis. Could you speculate as to why there's such an disproportionate overreaction to this recent crisis?
Because, and that's a good question, which I'm sure is going to be studied for a long time, but in the stock market crash, it was a lot of money spread everywhere. I think when that happened, the average household owned like $30,000 of stock, and it went down, or maybe 40, and went down 10,000. So it didn't necessarily crimp what they were doing. It didn't cripple financial institutions. This one is hitting directly institutions, and there's a little bit of that multiplier effect. If they lose money, they can lend a lot less money, like 8 times less. And that's been causing a little bit of fear and panic out there. So there are these things which can be looked at, why this could be more serious. Also, I mentioned losses of $350 million. The market losses have been far more than that. So that these subprimes ended up in a lot of securities, people won't touch the securities at all. And so you can argue that there have been far bigger losses than 300 because people don't have anything to do with those securities, or they have to pay a lot more to buy them.
2 more questions, one here and one here.
Bill Benzel, I'm with the National Foundation for Credit Counseling. One of the...
I hope you're hiring.
Yes. Very rapidly.
one of the things that we're seeing in terms of the mortgage crisis is, and we're trying to help homeowners that are facing all sorts of foreclosure issues, is that as mortgages and other financial products have gotten more sophisticated, it really has demonstrated the lack of financial literacy, the lack of financial understanding in the United States. What do you see as being the most effective way to raise the level of financial literacy in the United States?
You know, that's a great question. First of all, I agree with you that there should be more financial literacy. And I think, you know, a lot of banks and institutions, financial services roundtable, financial services forum has kind of taken this on as something about what can we actually do. And and I think personally it's all education. Teach the basics of finance. Save some money, you know, don't take too much risk, buy insurance when you need it, save for the future, what is a 401k, how do you finance a house, and not leave it to pure word of mouth. So it's education, and it really could start sometime in you know, junior high or high school, and maybe to educate, also to provide it to people who are doing those things. They can go somewhere and learn about it. And I believe we're working with institutions like yourself to come with programs exactly to do that.
Last question.
So, you know, first of all, I don't know how much of that oil price is speculation. I mean, if you talk to most of the people who know oil, they would tell you that there's not an undersupply, that there's plenty of oil and there's plenty of refining and it's not a problem. And you also saw a report came out last week that showed that people are actually buying less gas now. They're using less gas. They've already started to make the adjustment. And that's just driving less. They haven't had the chance to be able to replace the smaller cars like people did after 1979. So I think that people react to price signals quickly. I'm hoping that the next president, whoever it is, makes this part of a long-term policy, a thoughtful, do it right across the board, and it can't be something that gets changed every 2 years, every 4 years with every presidential administration. And I'm hopeful that'll happen, though I'm a little bit of an optimist. You know, people, you may think I'm foolish to think that because you would have thought, why didn't it happen before? Listen, folks, thank you very much. I enjoyed it, and good luck to all of you.
Thank you. Jamie, may I have your attention? May I have your attention, please? Jamie, when I asked you to come, I forgot to tell you that there's no honorarium. But I don't think money is your problem. So, in grateful appreciation for your spectacular presentation tonight, would you receive this from us here with our thanks and gratitude?